Good morning, this is Jovi at Beta 2 in London, the 12th of July, and the time is now 10 o'clock. As always, just a quick market update. Yesterday we saw risk markets trade heavily lower. Now the continued disintegration of peripheral bonds remain the major driving factors for risk aversion trades. The move higher in the bonds yesterday highlight the gravity of the Eurozone situation, especially now that Italy is coming under the hammer. The sense that Europe's policymakers are in a flap over how to respond to the Euro crisis was the main catalyst for Monday's negative price action. This morning, excuse me, the Euro stumbled to an all-time low versus the Swiss franc, and the Eurozone's government bonds soared higher, much higher, investors dumping the Euro like it was the ugly girl at the school dance. Now this heavy dumping of the Euro boosted the dollar, the Swiss franc and the yen, seen traditionally as safe havens. High beta currencies like the Aussie dollar and the Kiwi dollar also took a hit. Now it seems the Euro will continue to fall and take a beating as Eurozone yields continue to rise. If you look at the benchmark 10-year Spanish and Italian bond yields, they jumped each around 20 basis points, expanding the spread against safe haven German debt to the widest since the mid-1990s. The euro fell 1.5% yesterday versus the dollar, and this month is down over 4%, causing widespread panic, not in the offices of Beta 2, of course. The Swissy and the yen have rallied. The Swissy is hovering near historic highs against the sterling. The yen pushed lower, the yen pushed the dollar lower around 1%. The Aussie fell 1% versus the dollar, and the Kiwi fell 2% versus the US dollar. So, if there ever was a time to speak to a professional, contact Beta 2, www.beta2.co.uk. Have a good day.